If you are thinking of buying a house or applying for any type of financing, understanding your credit is essential to ensure you are getting a loan with the best possible interest rate and terms available. My name is Jonathan Getty, Branch Manager of Catalyst Lending, and today I'm going to share a few critical and often little known tips for optimizing your credit score. What makes up your credit score? Your score is made up of several components, including credit mix, length of history, new accounts, and inquiries. But the two largest factors are your payment history and your total indebtedness. Your payment history is obviously your record of paying your bills on time each month, typically within 30 days of the due date. Your total indebtedness means the amount of total debt in proportion to your total credit limit. Everyone knows that paying your bills on time is important, but total indebtedness is something that most people don't think about. One of the most common misconceptions about credit is that if you make your payments on time, it does not matter how much you owe. The fact is that your balance is a key factor in your total score. However, the dollar amount owed is not what is important. The biggest factor is actually the percentage of your available credit you are using. For example, if you have a credit card with a $1,000 limit and you owe $900, your credit score will be negatively impacted by the fact that you are using 90% of your available credit. If your balance is that same $900, but your limit is $5,000, your score will be significantly better because you are only using 18% of your available credit. It's important to know that not all accounts follow this rule. Only accounts with revolving balances, meaning they can go up and down from month to month, are significantly affected by the balance to limit ratio. Paying down the balances of installment loans, such as car loans, mortgages, and student loans, will have little or no impact on your credit score. Focus on keeping the balances of your revolving accounts around 25% of your limit or less at all times. If your balances are over 25%, you can of course reduce the balance to limit ratio by paying the balances down, but keep in mind you can also accomplish the same thing by increasing your credit limit. A simple tip: go to optoutprescreen.com and opt out of pre-approved offers of credit. This will not likely affect your score, but it will dramatically reduce the number of pre-approved junk mail offers you receive. So, make sure you pay your bills on time and keep your credit card balances down to 25% of the limit, and you will be well on your way to a strong credit score. If you are thinking of buying a home or refinancing your existing home, go to my website, www.catalystlending.com/credit, to complete a short application, get a free consultation, and find more simple tips for better credit.